Hello traders, hello investors, how are you doing today my friends? Welcome to another video here in the Finance Hydra channel. My name is Nathan and I hope you guys are not panicking here, right? The S&P dropped almost 2% yesterday. Today we are dropping more 0.6%. So is this a good time to panic? Well, let's try to understand the market's movements in this video. If you are already my subscriber, remember to click on the like button, my friend. If you are new around here, subscribe to this channel because I do believe this video is gonna be helpful, at least, right? So please subscribe. Let's take a look at the charts over here. The S&P, let's look in the 1 hour chart first. Let's do a complete multiple time frame analysis on the S&P. In the 1 hour chart, it is important to notice that, okay, it seems we are doing some range trading. We have this resistance and we have this support level. Yesterday, we did fill the last gap and we lost this gap as a support level. So is this a reason to panic? Well, maybe for some. For us, we understand that since we lost this support level, okay, we are bearish in the short term, meaning we might easily retest this black line again. Then we'll see. I do not believe we're gonna lose this black line from here because we don't see bearish structures. All right, we must see a bearish structure first before we can call it a sell or a true bearish reversal pattern. See, we have a top, a bottom, okay, but hardly it's gonna do this. It must do another top lower than the previous top here. And if we lose this support level, then all right, we have a bearish pivot point. We have a bearish structure going on. So yes, that would be a very convincing argument that the index is turning bearish. Right now, all we can assume is that we are going to retest the support level, and without bearish structures, we cannot believe it's going to actually turn bearish. We must see something better. We must see more confirmation signs. I see people all around saying that index is going to crash. Believe me guys, I'm here on internet, so I can tell you, I see people saying that the market is a fraud, that the Fed and the quantitative easing is going to ruin the country and etc. Guys, first, okay, before we continue our analysis, first, some people, they believe they are the smartest guys in the room, and they do believe that nobody else knows what the Fed is doing, what quantitative easing is, what macroeconomics is, right? So it feels like some people are too convinced on their own fundamentals and they trade on their fundamentals and they forget what the price action has to tell us and how can you do the proper risk management while trading. This is why charts exist. Right? They exist so we can do the right risk management and understand the market's current moment. Right now, all we can assume is that we are dropping, we have to retest our support levels, and this is it. Let's not try to be the next Michael Burry and try to predict what's going to happen. Because guys, if you try to do that, believe in me, you will get burned. Here, we are not predictive at all. We only see technicals, fundamentals, and we build our own thesis in this market based on solid evidence. We never see, okay, so the Fed is printing money, so the economy is gonna collapse, and this is it. No, it is not that easy. All right, it's not that easy. When Michael Burry predicted a crisis, he did a very amazing job. He studied a lot, and it took years for his scenario to materialize. So I see people saying that the economy is going to collapse, that the US economy is not good since 2008. I see people complaining about the Fed and the quantitative easing since 2020, April 2020. So guys, since then the market has been doing nothing but going up. So let's try to focus on what's really, really important. Let's try to understand why the market is doing what it is doing, because the indices, the S&P is a leading indicator. It's going to forecast the future because it is always running towards the future. The market, everybody knows what the Fed is doing. Everybody knows the inflation. Everybody knows everything. You are not the smartest man in the room. You are not Michael Burry. I am not Michael Burry at all. And probably not even Michael Burry is gonna be the next Michael Burry. So let's try to do our own research. And this is why I'm here for. I'm here just to help you guys. And let's see the midterm right now. When we analyze the midterm, let's take a quick look at it at the daily chart. In the midterm, we see that we do have a possible double top pattern. We already did a head and shoulders chart pattern, and this scenario was already fulfilled. We retested the previous support level, this black line down here. That's fantastic. However, we have another possible bearish pattern, a possible double top pattern over here. However, let's look at this Fibonacci's retracement, 38.2% retracement. This point is the very same point seen in the 1 hour chart as this black line, which worked as a resistance over here and as a support over here. Accordingly to the principle of polarity in technical analysis, past resistances are going to work as future support levels and vice versa. If the market, if the S&P actually loses this black line, okay, it's going to trigger this possible double top for good. I really expect to see a stronger bearish reaction, but you know, I can't predict the market. I can't tell you guys what's going to happen next, but I will do believe in a sharper, stronger bearish reaction. That could lead the index at least to the 61.8% retracement. Statistically speaking, when we respect the 38.2 and we bounce back up and then we break it again, usually we ignore the 50% retracement and seek the 61.8 in one single bearish leg. This is statistical. However, this is as far as I can go right now. I can't say we're going to retest this black line as a support level from here because we have too many support levels, right? It's not going to be an easy fight. But if we do, if we actually lose the supports, the Fibonacci retracements, and etc., there is a chance that the S&P in the weekly chart, in the long term, we are going to trigger a shooting star candlestick pattern and retest this black line again. If the market is actually going to crash in the long term, if we're going to see a long-term persistent bearish trend, okay, we're going to see a bearish pivot point in the weekly chart. What would be a bearish pivot point would be this, okay? We had a higher high, a higher low, then the index. The moment it lost this purple trend line over here, the bull trend got weaker. And if we do a lower high, a high lower than this one, and we lose the previous low, then the S&P is going to trigger a head and shoulders chart pattern in the weekly chart. That would be our bearish thesis, all right? Then you can say, yes, the market is reversing, the market is about to crash, maybe, right, potentially, but this is it, okay? Let's always focus on what the price action has to tell us. If you ask me, I do not believe this is going to happen. Personally speaking, me, Nathan, as a retail trader, as a free guy who can share his thoughts on the internet, I do not believe this is going to happen. If this is going to happen, we're going to see many indicators in the 1 hour chart, in the daily chart. We're gonna see many confirmation signs beforehand. Let's not try to predict the future, right? Let's not say, oh, the market's gonna crash. This is it. Only because the Fed's printing money, only because the economy is, I don't know, not that good, and etc. No. Here, you can build a very strong bearish thesis, looking at the charts, doing the proper risk management, and waiting. For Christ's sake, just wait for more confirmation before you panic and try to, I don't know, make more people panic with you, all right? So first, let's pay attention on this support level, the 38.2% retracement. Let's see if you're gonna find a bearish structure in the 1 hour chart first, then we can think about a bearish thesis, all right? For now, all we can assume is that we're gonna retest the previous support level just to keep range trading, and this is it, okay? But my friends, Let's avoid panicking. Let's avoid trying to be the next Michael Blurry, alright? Thank you very much for your support. Remember to subscribe to this channel. I think this video was very helpful, am I right? So remember to subscribe, click on the like button. Thank you very much for your support. Stay safe. Have a great weekend.